The manufacturing activity in China fell sharply in February with the official PMI, the Purchasing Managers' Index, numbers standing at 35.7, down from 50 in January, hitting the lowest level on record, even less than the 2008 financial crisis, highlighting the devastating effects of coronavirus. The virus has now spread to over 60 nations and has hugely impacted the supply chain across the world. Oil prices continue to fall with Brent crude trading below $50, and stock markets witnessing worst performance since 2008. The virus continues to spread aggressively across the globe. Let's get into this to know the possible impacts of this pandemic on global economy. Leading economic forecaster, Oxford Economics, warned that spread of virus could cost the world GDP around $1.1 trillion. It also estimated that China's GDP growth could fall substantially to 5.4% from 6% last year. As the virus spreads, this growth could fall below 5%. China is undoubtedly the worst affected country. Manufacturing industries on the supply side are struggling to find workers because of restrictions, and on the demand side, consumers due to falling consumption. The nation accounts for a third of world manufacturing and is the largest exporter of goods. A global outbreak will also prolong China's pain, as the subsequent recovery will become tough due to subdued global demand. China's quarantine rules have restricted around 100 million migrant workers from returning to work. This has led to broken supply chains around the world. Thousands of companies in US and Europe might face the worst in mid-March due to supply shortage, leading to productions cut downs and temporary shutdown of assemblies, resulting in job layoffs. Travel and tourism sector is among the worst hit and might take years to recover as consumer confidence hits the bottom. The extended Lunar New Year holiday is definitely not a good news for Chinese economy. With the virus spreading to Europe and Italy reporting numbers in hundreds, the European Union economy seems to be up for a tough time. A number of towns have been locked down in Lombardy, northern Italy, also the industrial powerhouse of the country. Italy stands as the most exposed nation to the coronavirus impact currently, as the already sluggish economy seems to be heading for bad times. Italy has been struggling with slow growth for many years. Its total production of goods and services was approximately the same as it was 15 years ago, and government debt is 133% of GDP, putting it among the worst performing economies in European Union. With the summers approaching, the peak season for tourists, the tourism sector will also take a hit. With pre-existing challenges, the health crisis could tip the nation in another recession. Other European economies are also in danger as the supply from East Asia breaks down. Major car makers are already facing shortage of car parts, forcing them to cut production. The ongoing low GDP growth problem along with a spreading pandemic might be enough to push the Eurozone economy into recession. Britain recently exited the European Union after a long tussle, and as it moved to make its economic conditions better, the coronavirus came threatening a slowdown in economy. The number of cases in South Korea has recently ballooned and the nation's economy is starting to feel the heat. The manufacturing industries have slowed down production, which is mainly due to broken supply from China. The concern of South Korea is more of dropping consumer confidence and consumption. It is seen that falling demand will affect the economy more than broken supply from China. To combat the falling economic activity, The government has injected over $13 billion in emergency funds. As the impact on Japan is considered, the timings couldn't have been worse. Tokyo was all set to host the 2020 Summer Olympics, showcasing a new Japan, and possibly restarting the economic cycle. But then the Diamond Princess cruise ship docked at Yokohama port and ruined all that. The ship with nearly 3,700 passengers was quarantined, but the damage had already been done. With Olympics just a few months away and falling tourist numbers, the economy of Japan is not headed in planned direction. The stock market in USA recorded its worst weekly performance in last week of February since the 2008 crisis. The Federal Reserve is looking to cut the rates to bring relief to the investors, but that will not save the economy from taking a hit. Experts have warned about a looming recession in the US if the virus strikes the nation. So far, one death from the disease is confirmed in US. The virus has knocked the door of sub-Saharan countries. These countries have high government and corporate borrowing, and a crisis in this situation will push these nations into unsustainable debt. The other party which is sweating badly over the outbreak is the oil-producing majors. The Middle East continue to cut oil production as prices fell below $50 per barrel last week, the lowest in 14 months. The tourism sector around the world is hit badly and will take years to bounce back as fear among consumers spreads. Already the Southeast Asian countries are feeling the loss due to falling number of Chinese tourists. Aviation industry is expected to lose around $30 billion of revenue around the world. Every major economy is already facing the heat over disrupted supply chain, but the worst is yet to come. But the crisis also opens doors for other emerging economies like Vietnam, Philippines and India to fill up export market space vacated by China, and also in the future when companies will look to move 20 to 25% of production out of China. The falling oil prices will also help governments contain their expenditure, fiscal deficit and inflation. In already turbulent times around the globe, the pandemic has become another pain point. The impacts of novel coronavirus on global economy will become clearer and clearer by the passing time.